Hello, on behalf of the entire economic research team of BNP Paribas, I want to present to you my very best wishes for the new year. May it bring good health and happiness. What we will bring to you throughout the year is a lot of economic analyses, weekly videos, publications, etc. Today we have a special video. We will talk about the outlook for 2023. My colleagues will cover in great detail what we expect to happen in different areas, countries, regions, or in specific thematics. What I want to do is to have a final look at 2022. Last year was a year of major surprises. The huge surprise of the inflation shock that brought us back to inflation levels not seen for many decades, but also the major change in the stance of central banks that were forced to adapt, to react their setting in terms of policy rates and to tighten policy significantly to get a grip on inflation. Inflation made this huge comeback for different reasons. We were still suffering from the inflationary consequences of COVID-19, but there was also, of course, the war in Ukraine and its impact on energy prices and food prices. This is 2022. We will now look at 2023, and this is what my colleagues will cover in detail.
In 2023, emerging markets will be confronted with a more challenging global environment compared to 2022. Admittedly, yes, the financial shock resulting from US monetary tightening and the strengthening of the dollar has passed, but its consequences on activity will be felt this year. Likewise, inflation will certainly cool down, but the prices of commodities will remain high, in particular on the agricultural segment, and this will continue to adversely weigh on the purchasing power of vulnerable populations. Uncertainty regarding the Chinese scenario will also add to difficulties. Some of the largest EMs to watch in 2023 include Argentina, Egypt, and Pakistan.
In China, the very sudden end of the zero-COVID policy has led to a major outbreak of the epidemic. Consequences for economic activity are significant, but domestic demand should recover once the epidemic wave is over, and also thanks to new policy measures. The authorities plan to help consumers and the property sector in particular. However, all in all, the acceleration in economic growth in 2023 should remain moderate, especially due to the continued weakening in exports.
In Egypt, economic prospects are challenging in 2023. In a context of ballooning inflation and deterioration in external accounts, the support from GCC countries and from the IMF will bring only a short-term relief. In 2023, if foreign investors are not back in the Egyptian market, the pound will continue to depreciate. It will feed inflation and pressure on public finance.
In Turkey, economic growth could surprise on the upside once again this year, because despite the very high level of inflation, domestic demand should offset the slowdown in exports. This year will be a test for the strategy of economic policy that combines fiscal easing, very negative real interest rates, and a number of regulatory measures to channel credit to exporters and SMEs.
For Central European countries, we expect a very dim growth outlook in 2023. These countries, being very open to trade, will consequently be affected by softer external demand. Risks to growth are tilted to the downside in the event of energy rationing. In 2023, inflation will remain again a key challenge. As of now, it is well above that of Eurozone countries. This regional difference can be explained by stronger wage pressures in Central Europe. Hence, inflation will remain sticky in the near term. However, since this summer, monetary authorities have recalibrated their policy as growth concerns have weighed in. They have shifted to a neutral gear. As a result, monetary authorities may be behind the curve to fight inflation, and this would need to be monitored.
In Brazil, will Lula's desire to put the state at the center of the growth equation to help attenuate poverty and social divisions come at the expense of a greater macroeconomic imbalances, most notably in the form of persistently higher inflation. Critical elements to help answer these questions will emerge over the course of the first semester with a presentation of the government's new fiscal rules and fiscal reform. These two reforms, which are eagerly awaited by the market, will, by the way, strongly condition the leeway that the central bank will have to cut down rates over the next 2 years.
2023 is starting off with contrasting signs in the Eurozone between hope of disinflation and fear of recession. We expect the fall in inflation to be apparently large and the decline in growth to be shallow and short. On the monetary front, after a series of rapid rate rises, the number and size of the latest hikes and the start of quantitative tightening should be more gradual. Finally, on the fiscal front, the focus will be on the scope and likelihood of deficit reduction against the backdrop of a reform of the rules of the Growth and Stability Pact in view of a more realistic disciplinary framework.
In France, 2023 should start with an ongoing funny recession. Growth should have been negative in Q4 2022 and Q1 2023, mainly as a result of the energy shock. It has consequences on the energy price, but at the same time on constraints on electricity production. It has implied lower energy consumption with consequences on both manufacturing output and construction output. However, this recession should remain broadly technical, since supply-side difficulties are still the main difficulties in the corporate sector. It should imply high investment and at the same time job retention. In parallel, we should observe stronger wage growth.
In Southern Europe, the situation in Italy will be scrutinized. Similarly to 2022, the country is expected to raise a significant amount of debt, above 300 billion euros, in the context of rising financing rates and fragile economic prospects. In Spain, two political events will mark 2023, the municipal and regional election both scheduled for May the 28th, followed by the legislative election on December the 10th.
After the detailed analysis of my colleagues, I'm left with the task of trying to summarize what their message is. I think in a nutshell we can say that 2023 should be a year of transition, coming after 2022, with its major shocks, and really in the run-up preparing ourselves for 2024, which should be a year of normalization in terms of inflation, policy rates, and economic activity. 2023, year of transition, but also a year with two phases, starting with still a lot of uncertainty. Will inflation come down sufficiently and sufficiently quickly? What is going to happen to economic activity? What about the recession? How deep and how long, etc., etc. And then to be followed towards a fall by looking at the next year and the hope it brings in terms of economic recovery, easing of monetary policy, which will start in 2024. So two phases, which is very important to keep in mind, both in terms of decisions you would take as a household or as a business person, but also as a financial market investor. In the early part of the year, we can actually expect that markets will really focus on these uncertainties, but as the year progresses, then the focus will be on the prospect of a better economic environment in 2024 and policy easing by central banks. All this presents a lot of movements. It is something that we will cover in our publications, we will cover in our weekly videos. So my advice would be to you, stay tuned and thanks a lot for joining us. Thank you.